Hello, it's Monday the 18th. I'm FxPlew and this is the Market Brief. Now, the Institute for Fiscal Studies is Britain's leading independent think tank. Paul Johnson is the big cheese director there, and he's labelled the budget as ludicrous. He feels that many of the measures are counterproductive, and he felt that the election manifesto had ruled out the rise in employers' national insurance. We had Q3 GDP out, and Rachel Reeves has been blamed for Q3 growth of just 0.1%. Of course, she pointed the fingers back at the previous government, even though they delivered 0.7% growth in Q1 and 0.5% growth in Q2. Starmer has been on. He was addressing a Welsh Labour conference on Saturday, and he said that he would defend the first budget all day long. That was while hundreds of farmers were actually outside the venue protesting the inheritance tax that's been introduced by Reeves, which many farmers fear will threaten the viability of farming. And indeed, if farmers are forced to sell up, this will not only add to inflation by making produce more expensive, it would also threaten the security of the food supply. That was certainly not covered in the election manifesto, was it? Excuse me. Over in the US, Powell confirmed that the Fed is not in a hurry to cut rates further. Inflation is still above target and still ticking in the right direction. As such, they don't want to find the neutral rate too soon, as this would leave inflation elevated over their 2% target. Excuse me. Of course, the actual neutral rate is still a bit of a mystery and a bit of an unknown, but where inflation is still coming down, we know that the current rates are certainly higher than the neutral rate will be. Nevertheless, the broad expectation is for the Fed to take another step towards that neutral rate with another 25 basis point rate cut at the December meeting. Meanwhile, in the market, it was all about the dollar last week. The dollar index peaked around 107.05, but where Friday's close was a little lower, around 106.75, there is a chance that the rally may be running out of steam. Sterling lost ground last week, trading down from about 129.20 down to below 126, and that wasn't helped by Q3 GDP, pointing to a further rate cut from the Bank of England. We kick off this morning around 126.25 against the dollar, 119.75 against the euro, and euro dollar is around 105.45 on the open this morning. That's it from me. I'll be back tomorrow.
Wish it could take me far away from these farmers' blues.